on company news, hotel and casino group Sun International's income from operations halved during the COVID-hit 2020 financial year. It slipped to just over 6 billion rand from a previous 11.8 billion rand, and that's because of the lockdown and the stringent restrictions on trading. Sun International was forced to halt local operations completely for about 3 months between March and July last year, and after that was only allowed to operate partially. The group says while the hotel and resort side has benefited from the growth in local leisure, it will continue to be affected by the lack of demand in business, conference, meetings and international market segments. And let's break down those numbers now with Anthony Leeming, who's Sun International CEO. Anthony, many thanks for your time this evening. So you were forced to sell off some assets and cut some jobs as a result of those lockdown restrictions. Given the talk around a third wave and the continued impact of COVID-19, is this a strategy that the company will continue with, or have you found a new way to deal with the difficulties around COVID-19?
Yeah, good evening. I think if you look back when COVID first hit, no one really knew how long it would take and how long it would be. So we reacted quite quickly. We did a rights issue, you recall, 1.2 billion. We sold our LATAM operations, and we hit costs quite hard with the Section 189 restructure, reducing staff by just around 2,300 people. And we've done a lot of improvements in the group and worked really hard on shoring up operations and making sure we're better at what we do. This has really helped us sort of see through a really difficult period. And I think a worse thing when we move back to level 3. So I think the business has strengthened its liquidity position, the balance sheet is strong, and operationally we're generating pretty good cash flows. So in the last quarter of last year, we generated really good operating cash flows with a margin above the prior years at 70% revenue, 70% of the prior year's revenue. So all these have helped us sort of withstand a very difficult period. And looking forward, if there's a third wave, the group is well positioned to be able to deal with these challenges and obviously from a liquidity position to see it through. So I think, yeah, everything had happened. We had to sell these operations. Looking forward, is there more? No, there's not many more, and there's not anything else on the block. Some spare pieces of land and stuff like that, but nothing else.
Now, I found it very interesting when I was looking through the numbers earlier on today that there has been a positivity around the gaming and gambling business side. And I'm just wondering, given the trend and the changes you've seen in tourism and the like, and people gaming a lot more, are you looking to invest a lot more in that particular part of the business, given the positivity that it's produced?
Well, I think we're a bit wary of saying it's totally positive. We're still well below 2019 levels on the gaming side. Certainly, the LPM business has done very well and getting close to above prior years. And in actual fact, October and November last year, it exceeded the 2019 revenue levels. So certain parts of the business in the online is doing very well, and we'll certainly look to push the online brand and a lot more in the next year and look for expansion opportunities there, as well as the LPM. The casino side still trading quite well behind the prior year. At the moment, probably running in November, we got up to 80% of the prior year revenues on the casino side. But certainly with restrictions still in place, we're not going to see a recovery to 2019 levels at this point in time. So yes, we'll look in the alternate gaming space online, and we'll look to invest more in those sides.
Right. I mean, you've mentioned this very briefly in your previous answer, but with the change in the way things happen in terms of conferencing and the like being done virtually, and this not looking to change anytime soon, what is the business's plan when it comes to dealing with that new normal when it comes to gatherings?
Yeah. Look, the hospitality side is quite different to the casino, in particular, as you say, with gatherings. So there's not much you can do in terms of getting gatherings. We have virtual solutions at our property, so you could have a smaller group at a property and manage a conference for other groups elsewhere in the country. So we can have that facilities. But I think in the short run, we're going to see a lot more smaller conferences, smaller meetings, and the big conferences will only return in, say, the new year in 2022. I say the new year, we're only just in the new year, but probably in 2022 will we start seeing the bigger conferences. So in the meantime, a lot of focus on local leisure, a lot of focus on gaming campaigns, and those sort of areas, because the conference business, there's companies with employees still not back at work. The banks are still all not back in their centre offices. Now they'll places like Discovery. So it's unlikely they're going to start their big conferencing anytime soon. So I think the key issue is have the platforms available, have the sort of the virtual platforms which you do have, and try and get as much business as possible on the smaller side. We have all the protocols in place and doing everything we can. Keeping costs down was quite key. hence why we cut reasonably deep, and we have a much more flexible labour pool in the conferencing side. And that's how we're really managing through the next year. So we don't expect a quick recovery, but we certainly do believe conferencing will return quite strongly because, these team meetings are going to go so far. I think people want to get together and collaborate.
Just a final thought from you, Anthony, while I've got you. We had our GDP figures coming out last week, and I'm keen to know your outlook on South Africa's economy and the operating environment being conducive that to create growth.
Look, a lot has to happen to create growth. And at the moment, I think the business community is very cautious about investing. So until that sort of changes, that sentiment changes, and I think positivity, so electricity, load shedding, none of this is conducive to really putting big investments in the ground. So I think we need quite a positive shift in mood and sentiment, and that seems to be lacking at the moment. So I think vaccine rollout, if that sort of accelerates and started having a positive impact, it will give confidence for people to invest. Because opportunities there, we've seen some business sectors come back quite strongly. I think we need to be, as a country, taking advantage, especially when tourism returns, when international visitations come back. We want to have that positive sentiment. We want South Africa seen as an investment destination.
Many thanks for your time this evening. That's Anthony Leeming, who's Sun International CEO, giving us a breakdown of the results that we saw coming out earlier this afternoon.